Well, our guest today is Peter Andersen, founder and portfolio manager at Andersen Capital Management. Peter, thank you so much for joining us today. Firstly, I want to get your thoughts on what we've seen so far from Q3 earnings. What do you think about the banks and what are you looking out for in the weeks ahead?
Well, we're all literally walking on eggshells here because there's been so much anticipation about this quarter's earnings. So they are probably the most watched period, I would say, in the past 5 years. And so far, we've seen a couple of very good signs that things look pretty acceptable. However, there's a lot of concern that these companies will not meet their earnings and certainly not raise their expected outlook for the next several quarters. So there are a lot of issues to be concerned about right now. On top of this, of course, you have the Fed, the US Fed anticipated raising rates even more. And so some people are concerned that at any moment, we could step on a trap door that will just make something break and can send this economy into a tailspin.
And as I just mentioned there, the markets at the start of the week seem to be getting a boost from some of these results. But last week was hugely volatile. The S&P 500 and NASDAQ marked their fourth weekly loss in 5. What are you expecting to see this week and how are you advising your clients?
Yes, well, it is a very strong market today as we speak. I mean, I think it surprised all of us. There's just not enough data to actually back up such huge swings that we've been seeing over the past several weeks, in fact, several months. So that is symptomatic of the great uncertainty that we're seeing right now. Any little change in the data, you have a couple of companies that maybe beat their earnings estimates and perhaps even raise their outlook. I would expect the market to really strongly rally 3% perhaps in a day, but that's not the substantial backbone of a recovering economy, is it? We have to wait and see consistent gains like that. And one last thing about this, what's puzzling to me is that when we do see a strong rally like today, it isn't simply just the financial stocks because Bank of America posted great returns. It's every stock that has, say, what I would call a high sensitivity to the general market has rallied. And that's symptomatic of not a really strong fundamental rally, but one more that perhaps quantitative managers are just looking at stocks wholesale saying, oh, let's bid up the prices of stocks that have much more dependency or sensitivity to the S&P 500.
And speaking of the recovery, we're only around 3 weeks away now from the US midterms. How much of a decision for voters is it going to be on the progress of Joe Biden's recovery, but also what the Fed's been doing to combat inflation?
All of it matters, right? It's hardly anything doesn't matter right now. So the U.S. citizens are looking strongly and anticipating as this election heats up what the results will be. But I will tell you right now, things are so uncertain. And I do think the Fed is running the show, so to speak. But any election outcome, you could have a market swing up or swing down now, which worries me because it means we're not looking at fundamentals. And one last thing about the fundamentals, if you're shorting stocks now, which I have a strategy that I do that, and a day like today, even those shorts are moving up. In other words, I'm losing money on those shorts. And that's not correct either, because that's just showing you I short stocks because I think the companies are poorly run. On a day like today, doesn't matter. Everything moves up. And I expect that to continue through the remainder of this year until the Fed starts making some even oblique hints that they might be ceasing on the rate hikes.
Well, it is going to be another interesting week. Peter Andersen, founder and portfolio manager, Andersen Capital, thank you very much.